Before we get to under 30, Jenny, I want to give a quick update. S&P is now down 86, 87, things moving. NASDAQ down 303. And there's very few days that I've said, that's a lot better than it was before. And so we've actually done a pretty good job of cutting these losses tremendously. We were on the lows down to 4212. So 4212 for the S&P. We're now 4305. So almost 100 points off those lows. So market bulls crossing their fingers, hoping this continues.
Yeah, NASDAQ has recovered almost 2% on the day, which feels ridiculous given that we're seeing it still down 2% on the day. But something to consider, we are rebounding slightly off of those lows, but now we're going to focus on Snap, a name that is falling significantly today, but has also fallen more notably really since their third quarter earnings report. Over the last few months, we have just seen such weakness in this name, along with some of the other social media companies. So to tell us more on this is George Tillis, TD Ameritrade Network contributor. George, we saw a downgrade in Snap today, but what is interesting with really this name is just the weakness. It seems like it cannot find a bottom in this market.
Yeah, the market has a lot to do with this, Jenny, but it also has to do with their last quarter earnings. They reported it back in October. I mean, the stock is down 61% in 6 months. It's hard to believe, but it happens for companies like Snap, which, overall is still very popular in terms of the number of users that are active, over 158 million on their platform. But the monetization of those users are a challenge, and there's some barriers because of major competitors. For instance, Apple's privacy changes that occurred were partly to blame for why Snapchat actually guided to the downside, where they're usually more optimistic and guiding to the upside on their ranges for revenue estimates for Q4 revenue. They actually guided on the low side closer to the 28% growth rate versus the 32% high range that was expected by analysts. So the stock gapped to the downside, even though they posted some strong top-line sales for the quarter, over 50% year over year. We're seeing some deceleration, unfortunately, for Snap in their top-line sales. And when it comes down to the contribution margin to the bottom line, they're really lagging their peers because they're really having some struggles from many competitors. One, Apple's created a barrier to a lot of competing social media and technology firms because of their privacy policies, which add another layer of challenges for advertisers and, of course, users. The second thing is on the e-commerce front, you've got to think about competition from the likes of Facebook Marketplace. That's becoming a challenge for Snap. And the other thing is advertisers. When you haven't proven yourself very, very soundly, perhaps like Google, which owns YouTube, and maybe Facebook, advertisers get a little gun shy, and that might be another challenge as they seem to be spending a little bit more money on more proven platforms versus Snapchat. Even though, again, like I said, many users on their platform, the monetization has really been a challenge. And TikTok is another reason why Wedbush, when they put their downgrade on the stock today, did denote competition from TikTok. And personally, I got teens and they don't spend as much time on Snapchat. I see my daughter on TikTok all the time. So I'm not saying that's a barometer for what's going on, but it seems to be that the monetization aspect of Snapchat is being outcompeted, so to speak.
No, George, that's really good insight because it does matter, where the kids are. The kids ultimately are going to be the future users going forward. It does matter in terms of advertisement dollars and things of that nature. But one of the things that's always struck me about Snap that's a little bit different, and this is from my own anecdotal usage of these different platforms, is in Snap's case, at least from its introduction as a product, it was always about kind of one-on-one interaction and limited to a social circle. An advertisement in that setting is far more intrusive than something like TikTok, something like Facebook or Instagram, where it extends beyond your social circle. There's influencers involved. There's businesses involved. There's sports teams involved. And I know TikTok or Snap rather has tried to get into that a little bit, but it just hasn't caught on the way it did on these other platforms. So I look at Snap and I look at something like Twitter that has struggled to monetize users throughout its history as, yeah, maybe they're great platforms, they're great services, but how does an investor expect these businesses to turn those users into money?
That's the biggest challenge, and that's the biggest question you have to ask yourself as a business model. First off, I think the demographic for Snap is a challenge. I don't think necessarily the younger users are going to pay up for things, or maybe even have the capability of spending money. That's the thing you have to think about. The other thing is do you pay for a monetizable model? For instance, YouTube allows you to pay a certain amount of dollars per month to bypass ads. Is Snap going to do that? Is of course Twitter going to do that? You have to think about the nature of who the customers are, the biggest users. And I don't necessarily think the recurring revenue model is going to fit the bill with Snapchat and their demographics. So, I just think right now there's two things going wrong for Snapchat, not to mention it really seems to be manifesting in the stock price, but competition. I think Facebook is very competitive. Apple, which really doesn't have a lot of social media presence, is trying to enter in that space. And I think that they're creating a lot of barriers to other companies in the social media space, like Facebook, like Snapchat. Now, Facebook is down as well in the last few months or so, there's no doubt, but you can see that the quality of the earnings for Facebook are holding their stock higher, whereas Snapchat, it doesn't have the margin profile to sustain its presence or price action, and that's why we've seen it down 61%. So you got to give a stock like this a couple of quarters. A couple of quarter turnaround is generally the case, or a rule of thumb that I've noticed in the past to determine if it turns around. But if not, it's one of the situations where you just can't buy the dip because you never know how long or how far it's going to fall.
George, thank you so much for joining us on this Monday. That's George Tillis, TD Ameritrade Network contributor.